Hello friends, this is your host Rakesh Kumar. In the previous video we had discussed about the cup and handle formation. We had also seen a few examples of the same in the next videos. In the present video we are going to discuss the inverted cup and handle, which is also a continuation pattern and it happens to occur in the downtrend. Before we go to see this inverted cup and handle formation, I just wanted to remind you that if you have not subscribed to our channel, then you can subscribe to it now and get notifications of the latest video uploads. And if you find this video useful for you, then please consider pressing the like button, which is below the video.
But before we begin, let us have a look at the risk disclaimer. It states that the futures, stocks and the options trading involve substantial amount of risk. Your capital is at risk, the losses can exceed the investment. The information is provided as is and the user of the information assumes the entire risk of any use it may make or permit to be made. So let's get started.
So dear friends, for the easy understanding of this pattern, which is the inverted cup and handle, I want to take help of a screen where I will try to draw it and try to explain it to you. So the first thing that we need for this pattern to occur is a prior trend. So since we are talking about the inverted cup and handle formation, this formation happens to occur in a downtrend, like I just mentioned before. So we need this type of trend here. Now why I have drawn circles, these lines like this, because I was trying to create lower highs and lower lows, and lower highs and lower lows are the indication of a downtrend. Since we want to show you that there is a continuation of the trend, and in that continuation, during that continuation, this pattern emerges somewhere in between, and we will try to show you how this happens. Okay, this is a downtrend, these are highs and these are lows. Okay, I will not mark them because I think it is very much clear. These are highs and these both are lows. So this, whatever the pair we are talking about, it is in a downtrend, and during this downtrend, whatever is the lowest low formed here, from there starts a small advance. From there starts a small advance, and this advance is in such a manner that it looks like as if it has formed a cup which is inverted. So do you think that it is looking like a cup? I'm sorry, my drawing is not so good, but yes, it is looking like this. Now you have to make sure that while this advance happens from this end, that is the lowest low, then this advance should not be very sharp. It should be steady. It should be steady advance, and it should not make any V-shaped recovery. So this type of advance, which is till this area, this is known as advance. Okay, and the time and this area from the high, whatever is the highest high made it during that advance, after that whatever the price action is there until the price reaches this previous low, until the price reaches near to this previous low, is known as decline. So ideally the time taken for the advance and the decline should be approximately same. So this time taken for the advance and the decline should ideally be same, but sometimes you will see that there is slight difference, and that is not a problem if there is slight difference, but there should not be huge difference that the price took advance like this and decline like this. No, advance it took a lot of time and then decline. No, you should have almost equal advance time and equal decline time. Now first of all we needed a trend, then we needed a cup, which we have seen that yes, after a trend there we have drawn a cup. After that cup, what we needed was cup height. Now what is the cup's height? The height of the cup is the height between, or the perpendicular distance between this low here, the first low here, and the high made during this. So this height in this case is equal to this. So this is the height of the cup. We will just keep it separate here. Okay, this is the height of the cup, and then after we need is the handle. Now the handle forms, when does the handle forms? When the pair declines to the previous low's level, and from there it starts another advance. It starts another advance. Okay, it starts another advance, but this advance fails to go beyond the half of the height of the cup. Ideally it should be only limited to 1/3 of the cup. That is ideal condition. Half is understandable, more than half is not recommended to be traded. But this handle eventually breaks below this low, Now if you make a ray joining these two lows, you will get the neckline. So this becomes your neckline. Those who are seeing my webinars continuously, they must know what is the meaning of a neckline. Neckline is a trend line which needs to be broken in order to get the confirmed trade. Now this is a break here. This small thing here is called the handle. This small formation here is called a handle. Now it will look like as if there is a cup placed on a table which is inverted. So that is why the name of the pattern is inverted cup and handle. Now this handle broke here below the neckline, and you can take the trade here also, but that will be a very aggressive nature. The next is where we should enter. So we should enter at the retest of this broken trend line, which is marked by the ellipse, which I am going to mark now. So this is the area where you should be entering a sell trade, and your take profit target should be equal to the height of the cup from the second low. Okay, so whatever is the height of the cup from the second low, that is your target from the breaking point. So in this case the target is equal to 151.86. okay, and where should be your stop loss? Your stop loss, if you are very aggressive, you can keep your stop loss just higher than whatever is the candle that has been made here. Sometimes you will see that there was a bearish engulfing candle formed here, or sometimes you will notice that there is a bearish pin bar formed here. So whatever is the high of that pin bar or bearish engulfing candle, you can keep your stop loss a bit higher than 5 to 10 points higher than that, and you can ride the trend. So this will have a very good risk to reward ratio, which suits good trading techniques. So that is all about the inverted cup and handle formation, and I think we have covered it all. So I always write it so that I don't forget anything. Handle, then we have the duration. Generally speaking, this duration of this pattern is from 6 to 9 months, and if it is less than that, then it is not worth trading. I am talking about the daily charts, but this pattern is formed on every sort of chart, even hourly and 4 hourly. Then after we have discussed the targets already, so that's all about this. The precautions we will see in the next video. So just to revise once, first of all we needed a trend which was downtrend, then after there was a small consolidation in the form of a cup, then there was a small consolidation, or you can say small rise in the form of a handle, which did not last long and broke below the neckline, which was formed by joining the two lows and extended to the right. After break, we waited for the retest, we sold, or we went short here with a small stop loss above, and that's all. Zoom. So that's all about the inverted cup and handle. If you have any questions, you can ask me in the comment section. Thank you very much for watching this video.